Good morning and welcome to The Business Show, your go-to source for money and finance news in 10 minutes or less every day. I'm Andrew Giancola, and today we're covering the student loan crisis deepens with nearly 10 million borrowers past due, and Goldman Sachs predicts gold prices could hit $3,300 by year's end. What's driving that surge? And OpenAI is setting sky-high revenue targets of $12.7 billion for 2025. And Trump has new 25% tariffs on foreign cars. How will this impact the auto industry? And Bill Gates is predicting that AI will replace many of your jobs. What does the future of work look like? All that and more. Let's get down to business. All right, so the end of the COVID era student loan payment pause is hitting hard, with nearly 9.7 million borrowers falling behind on their payments, according to the Federal Reserve Bank of New York. Now, the New York Fed estimates that those 9.7 million borrowers are past due on their loans, and it represents over 15.6% of all federal student loans. Now, the Biden administration's 12-month on-ramp period, which shielded borrowers from severe consequences for missed payments, ended on September 30th, 2024. And more than $250 billion in federal student loans are now considered delinquent. Now, new delinquencies are expected to cause borrowers' credit scores to drop more than 150 points, adding even more to the financial strain. Now, the surge in student loan delinquencies could push the overall student debt crisis to new highs, surpassing pre-pandemic levels. And millions of borrowers could face lasting financial damage from plunging credit scores, making it harder to borrow or rent. If delinquency rates continue to rise, it could impact consumer spending, credit markets, and overall economic growth. So this is a big deal for a lot of people if you are falling behind on your student loans. This is something that is a pants-on-fire emergency. You need to make sure that you figure out this situation so that your credit score does not continue to drop. Your credit score actually has a six-figure impact over the course of your life, so making sure that you ensure that that credit score stays up is going to be very, very important. Now, if you need to figure out ways to either refinance those student loans or if you need to figure out ways to reduce that pressure, then there are a bunch of different things that you could do. Now, we have a free debt course. If you go to mastermoney.co/courses, we have a free debt course, and that can help you actually go through this situation if you are going through that. But the student loan crisis is back, but this time these numbers are staggering. Will these new relief efforts be enough to stop the bleeding? We're going to find out, and we will keep you posted on how this is going. Now, Goldman Sachs is making a bold call right now on gold, and it's raising its year-end price target to $3,300 an ounce from the previous $3,100. Now, Goldman Sachs now expects gold prices to hit that new number, and the reason for this is strong demand. The revision comes as central banks continue to buy gold aggressively, boosting that global demand. And there is solid inflows on gold-focused ETFs that are also driving up these prices. And gold futures are up 1.3% to $3,060 this morning, already have crossed that $3,000 per ounce mark earlier this month. Gold is a safe haven for a lot of people when they are uncertain what the market is going to do. And with ongoing market volatility, investors are flocking to gold as that reliable safe haven. Now, increased gold purchases by central banks suggest heightened concerns about global economic stability. And if gold continues to attract investors seeking shelter from uncertainty, prices could rise even further. Now, one thing to note about gold is that gold is only worth what somebody else is willing to pay for it. Gold does not have intrinsic value like stocks or bonds do. So it's very important to note that when you are considering investments like this. Gold is a hedge against volatility for a lot of people. That is why they buy gold. It is not something to buy thinking it is going to go sky high over the course of the long term. Historically, gold has not had the same returns as other investments like stocks, but gold's appeal is that it is a safe haven. That's why a lot of people are flocking towards gold. OpenAI has a brand new revenue expectation, and they are setting these sky-high revenue targets for 2025, stating they are aiming for $12.7 billion, nearly triple what it made last year. And this is not just about numbers. OpenAI is restructuring its leadership and rolling out new features to stay ahead in the AI race. Now, as they have that $12.7 billion figure in 2025, they're actually nearly matching Microsoft's $13 billion in annual recurring revenue last quarter. Now, CEO Sam Altman will focus more on research and product development, while COO Brad Lightcap will handle day-to-day operations and business growth. Now, they also have some strategic partnerships that they are putting into place, like SoftBank, who plans to invest $40 billion in OpenAI at a $260 billion valuation, with funds partially supporting the Stargate venture between SoftBank, OpenAI, and Oracle. And OpenAI is introducing native image generation with ChatGPT, rolling it out to ChatGPT Plus, Pro, and Team users, and eventually to enterprise and EDU users as well. Now, obviously, there is a lot of competition pushing into AI right now, but this AI race is going to lead to some of the most valuable companies in the world. And that is one of the biggest things that we are going to be watching, because OpenAI is gunning for that massive growth. But will it be enough to beat the competition? We are going to see, and we will continue to report on this. Now, President Trump just dropped another tariff bombshell, and this time it's aimed at the auto industry. So he has been talking about doing this for a little while now, but he announced new 25% tariffs on cars made outside of the U.S., adding to existing duties already in place. Now, this move comes ahead of a broader slate of tariffs Trump plans to roll out on April 2nd. The countries most likely to feel the pain are Mexico, Korea, Japan, and Canada, all of which accounted for the majority of vehicle imports to the U.S. last year, according to global data. Now, this could make cars more expensive for consumers, and automakers with complex global supply chains could be hit hard, especially companies with factories in the affected countries. And the move could escalate trade tensions with key allies, leading to potential retaliation and further economic disruption. Now, this new tariff announcement is setting the stage for another potential trade war. Will it actually happen, or how bad will the fallout be? We'll be keeping a close eye on this one. Bill Gates is making waves with a bold prediction that artificial intelligence will soon replace many jobs, including doctors and teachers, over the next decade. Now, Gates believes that we are entering the era of free intelligence, where AI will be able to provide high-quality medical advice and tutoring that is widely accessible and affordable. And Gates argues that AI will eventually handle most tasks related to making things, moving things, and even growing food, which he calls solved problems. Now, AI development is accelerating at a pace faster than many expected, and Gates sees it as both a fantastic opportunity and a cause for concern. Now, Gates says he would start with an AI-centric startup if he were starting from scratch today, emphasizing the potential for huge economic growth. Now, let me know down in the comments below. Do you think AI will replace things like doctors and teachers? I would love to hear your thoughts. Listen, thanks again for tuning in to The Business Show. If you know someone who would find value in this episode, share it with a family member or a friend. Also, if you enjoyed the show, please take a moment to leave a 5-star rating and review. It helps us reach more people with this message. And don't forget to follow us on Apple Podcasts, Spotify, or your favorite podcast app. Thanks again for listening, and we will see you on the next episode.